If you thought the highest interest rates in decades would drive down house prices, you'd be wrong, because a number of Canadian cities have just hit new all-time record highs for home prices this spring. Hey there, and welcome to Bald Prairie Real Estate. My name is Matthew Pfeifer, real estate agent in Regina. That's my trusted assistant, Matilda. This is my monthly Canadian real estate market update here for March 2024. We're going from Victoria to Halifax, all the cities in between, updating you as to what's going on in these different Canadian real estate markets. For returning viewers, you're gonna notice this is a completely new format. I think you're gonna like it, but let me know in the comments below what you think of it. This wouldn't be a Bald Prairie Real Estate video though, without another one of my terrible bad dad jokes. Those aren't going anywhere. How do prisoners communicate in prison? With a cell phone. If you have a terrible joke that I can use in a future episode, put it in the comments below. Let's get into the update. Normally we see sales in Victoria pick up about 30 to 35% from January through February. And this month, we saw it pick up 32%, so kind of expected for the seasonal trend, but still 22% below my 5-year rolling average. Normally in Victoria, you see about an 8 to 10% increase in new listings month over month, and this month we saw 11%, although it is still up 19% versus that 5-year rolling average. And Victoria is one of the very few cities where new listings are increasing, not decreasing. While active inventory in Victoria is up versus my 5-year average, that's more driven by the low levels of inventory in the previous few years. If you compare this to the pre-pandemic levels of inventory, right now this would actually be considered relatively low levels of inventory for the Victoria real estate market. Months of inventory in Victoria dropped from 6.3 to 5, putting it back into a balanced market. This is a trend that's been happening for a couple of months in Victoria, and I expect it to continue through the spring market. 2 months in a row now, both month over month and year over year, home prices have basically remained unchanged at $850,000. Generally, as we get into the spring market, home prices will start to tick back up. The question is going to be what happens after the spring market. Do prices fall back off? Do they continue on, flatten off? That's going to be the real story. Everybody and their dog is talking how home sales increased in Vancouver both year over year and month over month. Yes, better than the worst year ever last year, and month over month up 37%. But you know what happens typically in Vancouver? Home sales increase 37% January to February. That's actually the 5-year rolling average. It's still down about 16% versus that 5-year average as well. So we're still down versus a very busy 5-year rolling average that I've got here, but kind of seasonal expectations for the jump in sales. I think though, if you told most people that Vancouver is going to see a fairly typical seasonal uptick in sales with higher interest rates and higher levels of inventory, most people wouldn't have expected that. As you can see, new listings in Vancouver are still below that 5-year rolling average, so that wave of distressed sellers that was supposed to come to the real estate market, well, it hasn't materialized yet. And I can see people madly typing in the comments already. It's because of all the extended amortizations. That only applies to those with fixed payment variables, about 15% of the total mortgage market. And we've seen those extended amortizations declining all through 2023 and into 2024. So that's not the real answer. The real answer, I think, is because you've got a lot of homeowners sitting on very good mortgage rates. Why would they sell their house, triple their interest costs? They're not going to do it. You're probably not going to see those houses come to the market until those mortgages come up for renewals, and then those home buyers, or homeowners, I should say, have some decisions to make. While the number of new listings is down versus that 5-year average, active listings, that's the opposite, that's increased. Typically you see about a 3 to 5% increase month over month, and this year we saw an 11% increase. That pushed months of inventory up to 6.8, further into a buyer's market. But remember, this is a citywide number. This specific neighborhood or property type you're looking at could be very different. The Canadian Real Estate Association's composite benchmark price increased $10,000 month over month, catching a lot of people by surprise. But you know what typically happens in Vancouver from January to February? Home prices increased about $10,000. That's actually the 5-year rolling average. This has got a lot of people kind of wondering what's going on here. We've got higher months of inventory, higher overall active inventory, higher interest rates than a year ago, and we're still following kind of those seasonal price patterns in Vancouver. Home sales in the Calgary real estate market continue to be really hot, but versus that 5-year average I like to look at, it's actually slightly less than it was previous month. Overall numbers are up, obviously. That has less to do though with less demand from buyers and more to do with less supply available for them to actually purchase. If you are looking for a house in Calgary right now, you know exactly what I'm talking about. Any way you slice it though, whether it's versus last year or the 5-year average, home sales are way up in Calgary right now. New listings are still down, but the gap versus the 5-year average actually shrunk a little bit. So that's good news for buyers. There was, I guess, a little bit more supply, but no matter how you look at it, there's not enough supply for the demand for home buyers in Calgary right now. The good news is supply is increasing a little bit faster than it was last year. I want you to let this sink in for just a second here. The 5-year rolling average is 4,600 houses for sale this time of year. That includes last couple of years of very low levels of inventory. Right now, 2,300 houses for sale, really low. Last year, 2,700 houses for sale. So there's just nothing for buyers to pick from right now in Calgary. So it shouldn't come as a surprise that all the months of inventory continues to decline at 1.1 right now. So a month of inventory. If you're looking at townhouses, for example, less than a month's worth of inventory, meaning that basically every single month, a brand new set of houses is coming up for sale because everything else is essentially sold. No surprise here then that home prices are shooting up in Calgary. Just look at this price chart. This is absolutely crazy. These are like 2021 and 2022 type price increases, $10,000 a month. That's not sustainable. It's not to continue, but yet it still continues to happen. And with the population increase and the demand from investors, mainly coming from Ontario and BC in Calgary right now, I think this trend is going to continue for at least a little while longer. Sales in Edmonton increased typically about 30 to 35% from January to February. In this year, we saw them increase 31%, but they are still up 37% versus my 5-year rolling average. The number of new listings this past month in Edmonton is kind of what you would expect, and that has been Edmonton's calling card even through the last couple of really busy years. Edmonton has definitely been less busy than Calgary. We've seen things kind of where we'd expect them to be, and that's what makes the previous month's sales numbers look really out of place compared to everything else we're going to talk about. It's an active inventory where we see those big sales numbers rear their ugly head, and while inventory is increasing, it's very slight. That's better than what can be said both Regina and Saskatoon, where it's going in the opposite direction. We'll talk about that in just a second here. But these inventory levels are back to where they were in the spring of 2022, and we know how busy that market was. Those big sales are also pushing down months of inventory, where Edmonton is quietly joining the rest of the prairies, and that sub 3 months of inventory closing in on 2 months of inventory, much like we're seeing in other Canadian prairie cities right now. Canadian Real Estate Association's composite benchmark price increased $16,000 month over month. That's the largest increase I have recorded. I've only got a decade's worth of stats, so I'm sure somewhere there's been a bigger month, but that is a massive number. And now Edmonton sits with a new all-time high for that benchmark price. Obviously, I keep close tabs on the Regina real estate market, that being the market that I work in, but seeing 273 homes sell in a month is absolutely astounding. I actually couldn't find a single month going back through all the records, single February, that we had more than 270 homes that were sold in February. So that's absolutely crazy. And it wasn't that long ago that I was telling home buyers and sellers, if we saw 250 homes sell a month, Regina, that was a really busy month. And for it to happen in February is crazy. Usually it was only like April, May, June, maybe a July or a September that we'd see that. Last year, we saw 8 of 12 months with more than 250 sales. This is absolutely crazy what's going on in Regina right now. New listings is where it really starts to go wrong for buyers. It should be increasing. It was basically unchanged month over month and got worse versus the 5-year average. Simply put, people in Regina are not putting their houses up for sale, and I don't blame them. If you got a really low interest rate, why would you triple your interest rate cost to move into a bigger house? You're probably just not going to do it. Active inventory is where the ugliness continues for buyers because it should be increasing this time of year. It's decreasing, going the absolute wrong direction. This is the fewest number of homes I've ever seen in my real estate career. I'm over a decade in the industry now, and I had to go back to the early 2000s boom that we had to find a time where we had fewer homes for sale at this time of year. And of course, Regina's grown all in the last 2 decades. The 2 months of inventory is the fewest I've ever seen in Regina in my career. I'm gonna pull the real estate curtain back here for you. Look at this. So this is what our back end looks like. You can see new listings and sales are basically neck and neck here. Again, this is only the last 7 days, but still, usually new listings outpace sales by 30 to 50%. It's not very often you see home prices increase $10,000 month over month, Regina, and that's exactly what we just saw this past month. And I'm going to give you some little advice here about multiple offers, bidding wars, and we are seeing more of those in Regina right now. Don't do it. Don't get into a multiple offer bidding war situation unless you absolutely love the house. If you kind of like it, you're trying to find a way to make it work, don't do it. Only get into a bidding war, multiple offers if it's a house you absolutely love. If not, wait until you find that right one. We're getting to the point where the lack of inventory is actually holding back sales, and yet it's still silly busy in the Saskatoon real estate market. With over 300 homes sold in the month, that marks only the second time in the last 2 decades where we've seen a February with more than 300 sales. They are at least seeing a little bit more for new listings in Saskatoon, but even still, this was the second lowest number of new listings in the Saskatoon real estate market in the last 20 years, second only to last year, and not by much at that. Similar to what's playing out in Regina, active inventory in Saskatoon continues to drop when it should be increasing. And not only is it dropping in terms of absolute numbers of houses in the market for sale, it's also the gap versus the 5-year average is increasing right now. This is not good news for buyers. Seeing months of inventory closing in on 2 months of inventory this early year in Saskatoon is scary. I'm going to read back here months of inventory for the last few Februarys starting in 2022. 4.3, 3.5, 3.7, 6.3, 7.4, 7.9, and 9 months of inventory. With how much home prices are increasing in Saskatoon right now, I'm probably gonna have to readjust this chart to allow for that increase. We're seeing it at $388,000 right now, $16,000 month over month. And I wouldn't be surprised if they have another big month. We see that benchmark price in Saskatoon break $400,000 this spring. Over the last 5 years, general home sales in Winnipeg increased 20 to 25% from January to February, and this year we saw a 20% increase, so kind of the lower end of that range. But if you go pre-pandemic, this would actually be considered a very busy start to the year in Winnipeg, and it's single-family homes that saw the biggest month-over-month increase at 15%. New listings versus the 5-year average look to be on par, but if you go pre-pandemic, this would actually be about 7 to 10% below what the average is. So on the surface, it looks like new listings are keeping pace, but they're really not. And I'm gonna sound a little bit like a broken record here. Versus the 5-year average, active inventory up about 8%. But to go pre-pandemic, active inventory is down about 25%. The busy months of sales has months of inventory trending back towards a seller's market. Still ways to go. We're at 4.1, which is the middle of a balanced market. Last year was 4.6. Home prices in Winnipeg have started their seasonal trend back up. Last year, they peaked at about $350,000. The all-time peak was in 2022 at $370,000. Agents are telling me, though, that they are seeing a lot more multiple offers right now than they kind of expected. The headlines will tell you the Toronto real estate market saw sales increase 20%, but that's only versus last year, the worst year they've had in 20 years. Month to month, though, sales are up 30%, and that sounds pretty impressive until you realize the 5-year average is a 42% increase January to February. So yes, sales have increased. It's busier than last year, but it's still nowhere near the last 5 years or the pre-pandemic levels for sales. I've seen a lot of people saying how new listings are exploding right now in Toronto. And anybody telling you that is not only incorrect, they're probably not giving you the proper context. New listings did increase 30% month to month. The 5-year rolling average is a 30 to 35%. So we're at the bottom end of that range. And even if I go to pre-pandemic 5-year average, then we're only about 35% up. So we're still kind of the higher end of that range, but well within what we normally expect at this time of year. Then I see people point to the 11,000 homes currently for sale in Toronto, say, see, look at all the inventory. And yes, it's up 18% versus my 5-year rolling average. The previous month, though, it was a 30% increase. So it's actually trending the other direction. If I take the 5-year rolling average pre-pandemic, the 11,000 homes that are for sale right now would be exactly right in line with the average. Looking at months of inventory, Toronto is currently sitting at 2.6. So that should mean it's a seller's market. Not entirely true. I'm going to talk about what is months of inventory, why do I use it? So months of inventory is calculated by taking the current inventory divided by the previous month's sales. Less than 3 months of inventory generally is considered a seller's market. 3 to 6 months would be considered a balanced, and 6+ would be considered a buyer's market. But just because it's in one of those categories does not mean that automatically prices will go up or down depending whether it's, seller's or buyer's market. It does give you an indication of kind of where things are going. Even still though, over the last 2 years, Toronto has never even been in a balanced market, let alone a buyer's market. And yet we have seen home prices obviously in Toronto decrease about 20 to 25%. So it's not an exact science, but I like using it because it gives an indication, kind of a trend line to follow where things are going. Looking at the Canadian Real Estate Association's composite benchmark price, you can see that it increased $30,000 month over month. Now that's a significant increase, and it's also the first increase we have seen since the summer months last year. Where I think this is really interesting is that $30,000 increase January, February is actually the typical increase we see. We saw it last year, and that's actually the 5-year rolling average as well. Why I think this year is maybe a little more interesting than even last year is that we currently have more months of inventory, more total inventory, and higher interest rates than we had exactly a year ago. And yet we're still seeing kind of the similar seasonal price increases that we typically see in Toronto. How real is the bump in activity that Ottawa real estate agents are telling me they're seeing? Well, the short answer is it's actually real. They're still seeing sales well below that 5-year trend line, but generally from January to February, you're going to see about a 30 to 35% bump in activity. And that's exactly what we saw this past month. So yes, it's the seasonal effect that's impacting sales, but it's also kind of what we would expect this time of year. The same can be said about new listings in Ottawa. It's still a little bit above that 5-year trend line, but generally you're going to see about a 20% bump month over month, and that's exactly what we saw this past month. So this idea of the wave of distressed sellers having to put their houses up for sale, well, that still hasn't materialized yet in the data. And sounding like a broken record, the same can be said about active inventory. Yes, it's up 17% versus my 5-year rolling average, but that is including data where we see some of the lowest levels of inventory Ottawa has ever seen. Go back previous to that, and this level of inventory is actually pretty typical. So you can pretty much sum up the Ottawa real estate market as following seasonal trends, not as busy as it has been in the past couple of years. Duh, that should be obvious. Months of inventory did increase very slightly from 3 to 3.4, so kind of right on the edge of that balance versus a seller's market right now. What was interesting is that we did see that increase. Typically, months of inventory will start tightening up in the spring market, so we'll have to wait and see, was this just a 1 month bump or start of a different trend? For the first time since July of last year, Ottawa saw a month-over-month price increase in the Canadian Real Estate Association's composite benchmark price. When you're looking at this price trend chart, you can see that this winter's bottom was a little bit higher than last year's bottom. We'll have to wait and see if this year's peak is higher than last year's peak, which was $660,000. Starting things off at $630,000. It wouldn't take very much of a busy spring market to see that happen this year. And for the last couple of years, we've seen that prices in Ottawa have peaked out very consistently in that June or July timeframe. Again, we're gonna have to wait and see what happens this year if we see that repeat once again. Real estate agents in Montreal tell me that home buyers are starting to resume their searches. Many had put their house search on pause for the last couple of years are back in the market. And you can see that in the sales numbers, where typically you're gonna see about a 30 to 35% jump in home sales from January to February. This year, there was a 60% increase. And yes, home sales are still below that 5-year rolling average that I use. Of course, we saw some very busy months there. But if you go to the 5 years prior to the pandemic, this past month's sales would actually be right in the middle of that 5-year average. When looking at new listings versus my 5-year rolling average, it says it's up about 9%. That 6,700 sounds like a lot, but if you actually go and look at the 5 previous years prior to the pandemic, that 5-year rolling average is 7,300. So this is actually a fairly low level of inventory for Montreal. And much like what we're seeing with buyers, sellers are starting to decide it's time to move on with the next phase of life. And that is partially why we're seeing more new listings coming to market right now. Agents aren't telling me though that they're seeing people having to be forced to sell their houses or saying they're selling their houses because of higher mortgage payment. When it comes to active inventory, the Montreal real estate market is a little bit different than a lot of markets. It's not uncommon to see fairly high levels of inventory in comparison to other cities in Canada. For example, you look at Vancouver, it's about 25% smaller than Montreal, and yet Montreal typically carries 40 to 50% more inventory on any given month. So while these Montreal numbers are looking high compared to this 5-year rolling average that I'm using, the 18,000 homes that are currently for sale is actually down quite a bit from the pre-pandemic averages, where typically it was closer to 28,000 at this time of year. When I was looking at the months of inventory, I actually went back and checked my calculations to make sure I'd done it right, because to go from 8.1 1 month to 4.7 is significant. And again, that's putting Montreal basically back in the middle of a balanced market, where previously it was fairly heavy into a buyer's market. But I wanted to go back and look at pre-pandemic February's and see, okay, what was the months of inventory? And here's where they were. Starting in 2019, 5.1, 6.4, 8.0, 9.3, and 9.8. Again, going backwards. So while months of inventory seems like it's kind of in the middle of a balanced market, it's actually fairly low compared to the kind of pre-craziness years. I should coin that term, pre-crazy years of active levels of inventory and months of inventory. 1 month isn't a trend, and neither is 2, but it's something to pay attention to. We saw home prices now increase 2 months in a row in Montreal. Month to month was a $3,000 price increase last year. This year, a $5,000 price increase. And if you look at this price trend, we're getting very close to the last year's high of $522,000. Probably one more busy month here, and they're going to be last year's peak already. It's really nice having a 5-year rolling average now for Halifax. I finally collected enough data for that. The 317 homes, though, is the worst number of sales in a February that I have. Again, we're only going back to 2019 on these records. What's interesting, again, going kind of the January to February, sales increase, typically 10 to 15% is expected. This year, a 33% increase. That's something you have to take note of. And agents in Halifax are telling me that houses below $500,000 are selling really, really well right now, and that's going to become important here in just a minute. New listings is where things get kind of interesting, because typically you're going to see an increase in new listings January to February. This year, we saw a decrease, and that's what drove it versus the 5-year average below that 5-year average. Halifax is a little bit interesting when it comes to active inventory. Most cities in Canada see increases through the spring, and this is why it's interesting looking back at historical data, because in Halifax, they actually often see a decrease February to March. We saw that this year. What's going to be interesting though is if inventory now starts to increase again. Generally about a 10 to 15% increase is expected by the end of this month. So if that doesn't happen, that's going to be something we have to pay attention to. With months of inventory at 2.25, Halifax is still really low, one of the lowest in Canada. It was though the lowest in Canada for years until Calgary overtook it in about the middle of last year. There was a time though that months of inventory had dropped in Halifax below 1 month. It was down to 2 weeks at one point. Yes, 2 weeks, not 2 months, 2 weeks of inventory. Looking at home prices in Halifax, which in this case, we're looking at average price. I don't like using it. I have to because Halifax doesn't use benchmark price. And I know most people are used to talking about average price, and that's what you see in most videos and news articles. But here's why it is problematic. In December, the average house price in Halifax, $560,000. Then in January, it jumps to $580,000. This past month, it drops back down to $570,000. Home prices haven't increased and decreased $10,000 month to month, back and forth like that. This is what happens when you have a small number of sales, 317 in a month, and it can get skewed by the composition of sales. As I said earlier, a lot of homes in Halifax this past month sold that were below $500,000. That drags that average price down, especially in a small sample size, like the city of Halifax. Home prices did not drop $10,000 month over month this past month in Halifax. That's what happened this past month in the Canadian real estate market. If you love this video, please give this video a like, hit the subscribe button if you want to keep up to date on the Canadian real estate market, and leave some comments below because I love chatting with you guys in the comment section. As always, thanks very much for watching.